Have you heard the saying, gold never really goes out of style? Well, according to a recent report from Kitco News, that might be truer today than it's been in decades. And now here's where it gets interesting. Even after a short pullback from record highs, gold is still up more than 50% year to date, according to Manthey, a commodities strategist at ING. She says the recent correction isn't a setback, it's healthy. You see, in her view, this is not a bubble about to burst, it's a recalibration before another potential climb. And what's supporting that strength might surprise you. Manthey points to a few major forces at play. First, central banks around the world, they've been quietly but steadily adding to their gold reserves. In fact, she noticed they purchased an estimated 220 tons of gold in the third quarter alone. That's 28% higher than the previous quarter. And it's not just the usual players. Countries like South Korea and Serbia are even looking to expand their holdings. Now, when central banks start increasing their gold positions, that tells you something about long-term confidence in the metal's role as a store of value. So here's the thing. While some headlines focus on short-term price swings, the deeper story is about structure. Manthey describes this shift in central bank behavior as structural, meaning it's not a passing phase, it's a new approach to managing currency reserves. And that's exactly why many people choose to add physical gold and silver to their own long-term strategies to bring that same kind of stability closer to home. If you'd like to learn how to do that confidently, Goldco makes it simple to get started. You can request your free gold and silver kit. It's a clear, no-obligation guide that explains how to hold physical precious metals safely and securely. Now let's get back to what's happening in the broader market. Manthey also points out that ETF demand, that's the paper side of gold ownership, has been a big factor in recent rallies. When people expected interest rates to come down, many turned to gold-backed exchange-traded funds. In fact, global ETFs added 222 tons of gold between July and September, according to the World Gold Council. But here's the key difference. While those funds track gold prices, they don't give you direct ownership of the metal itself. You can't hold it. You can't take delivery. It's a paper representation, not the real thing. That's why physical gold and silver have always stood apart. They offer tangible value. You can see it, you can hold it, and it's yours. And according to Kitco News, even with recent market dips, global bar and coin demand has remained strong. That tells us something fundamental has not changed. People around the world still trust physical gold and silver to preserve value over time. Now, while ING's outlook includes expectations for continued rate cuts from the U.S. Federal Reserve, that's just one factor. The bigger picture, as Manthey explains, is that gold support goes deeper, anchored by central bank demand, global uncertainty, and steady consumer interest. So even as markets shift, that foundation remains. And if you're looking to build a foundation of your own, one that includes something real, you might consider doing what central banks are already doing, adding gold to the mix. Right now, Goldco is helping people do exactly that with a special offer. When you open a qualifying account, you can receive up to 10% back in free silver as a thank you bonus. And for a limited time, you can also claim a free Ronald Reagan half-ounce silver coin, a beautiful collector's piece that honors one of America's great leaders. So if you'd like to learn more, visit goldco.com or click the link to request your free gold and silver kit. It's packed with information to help you make a confident, informed decision about adding physical precious metals to your long-term plan. Because at the end of the day, as Kitco's reporting reminds us, whether gold hits new highs next year or simply holds steady, its real power has never been about price, it's about presence. And that's something that paper cannot replicate.